All right. Good morning. Good morning, everybody. Jobs day. The market is giving them a little more weight than I anticipated, but we can see that with the cumulative volume from the overnight hours, which we'll get to in a minute. I'm just checking something on one of my other machines. Just a second. So looking at what happened in Asia yesterday, or what happened while we were sleeping, kind of approach it from, either way you want. They had a great trading day. It was like a 3% run in the Asian market. Europe is still open. It's about noontime over there, 12:30. And so far, they were talking about the differences between real estate, energy, telecommunications. It's interesting how the way Bloomberg and Wall Street Journal and everybody always suggests that bond traders are somehow more sophisticated and are more accurate in their trading processes. And this morning on Bloomberg, that's certainly what they were implying. The moves we've been seeing in the bonds kind of takes the Fed pivot off the table. And their implications were that, well, bond traders usually get it right more than they get it wrong, as opposed to, retail investors in equities. I don't know if I like that slander or not. Hong Kong rules was in Bloomberg's 5 things you need to know. More reduction in the COVID-0 policy of China. The Dutch have joined in on limiting China when it comes to chip making equipment. It'll be interesting to see how that affects, the chip names we've got, AMD and Intel, NVIDIA. The market is holding its breath, waiting for the initial jobless claims today. And we've got additional auctions today. And then we've got a lot of earnings, not any real big ones. It's tomorrow that's the big one. We've got one of our 3 benchmark economic data points coming out tomorrow morning. It's going to be the most important event of this week. So while today is important, yeah, tomorrow's got it beat. You can see how the volume is light this morning. If we didn't know that there was econ, this would be a warning. But we know we have job numbers on deck, so it makes perfect sense that the volume is light because everybody's waiting on the data. So we can just get that out of the way. We have the 10-year, the 3-month, 3-year, 30-year, 6-month, 4-week. I got to say that the 30-year and the 10-year are two that I pay particular attention to. And the IRX on the front end is something that I didn't used to pay attention to. It's something that is more recent to me. That should get your attention, right? When you see that, like, oh, dang. That's the front end of the curve, yeah. And that explains, that conversation we had yesterday where the front end does this. What do you think the back end's got to do? Yeah. So a lot of auctions today. Thankfully, no 1 o'clock auction today. So by noon, you will have all of your data, and that leaves the afternoon free for a 0-day trade, which is really good. Good. Watch the clock today. Can't stress it enough. You should have stayed out there for a moment. All right. We talked about this range for, I don't know, weeks and weeks. Probably getting tired of hearing about it. I'm certainly getting tired of looking at it. We stayed in the box yesterday. We came all the way down to the very bottom of the box, and we bounced off of the bottom of the box, and we went right back in again. We're still in the box. So we're looking for, this definitive signal on how we're going to finish the year and trade at least into Christmas, and if not into the new year. And we continue to just run sideways. The only people that can effectively trade this are the ones running options with no up or down, right? Like selling spreads and iron condors, things like that. The threat of a big break is there. All of our tools are showing a rolling over in the processes, say like McClellan summation, bullish percent indexes, stocks above their 200, stocks above the 50, stocks above the 20. And everything we have says breath is going to the dogs, and we still ain't dumping. It'll only take one little catalyst, though. Pull one brick like a Jenga stack, and down she goes. But the thing is, the same could be said about an upside run. I had wrote more than once about China policy being a very large part of any kind of threat to an upside explosion. That's still on the table. The reductions that they've been doing are really soft, gentle reductions in this COVID zero. And so we haven't seen an explosion, but they could just shrug and scrap the whole thing and the market would explode to the upside. A reduction in hostilities or some kind of ceasefire with the Russia-Ukraine, that would pop us to the upside. So there is still a threat of an upside move too. And we know we do not yet have a higher low. So technically speaking, the run up off of the October low is still valid. Now, looking at it on a daily, using a linear regression line, it's where we get our swing highs and our swing lows. And generally speaking, you get what you get on one side to the other. So if you get a 1.5% swing on one end of the leg, then you get a 1.5% swing on the other side. We're at the edge of the swing to the downside. That's pretty obvious. Now, the thing is, it can break down and go. that would discount the linear regression model. But we had the same model back here on this run. And when it got to the edge and it should have turned and continued to go up, it didn't. It broke down and away we went. So just because this looks like everything is fine and, you know, it owes us a swing back up, it doesn't owe us a swing back up. And I want to draw your attention to this part of that August rally and this part. Does that look eerily familiar? There is a head and shoulders here. The left shoulder, the head. And we kind of need that right shoulder. We kind of need that little bit of a run up, just like here. And we had that little bit of a run up. So everything says we're probably going to get an up move today, at the very least, get out of yesterday's range, which is a really narrow range, and get a pretty good move to the upside. So the ADR says 1.86%. We can snap a line and run it up 1.86%. And that gets us to 4008, or very close to that. And it's where that yellow bubble is that says 409.25. That's my ADR line, which we wouldn't see because we're on a daily chart. But now that we're back into the intraday, there's the line. Running up to the 4,000 today would put us really close to the COG line. So I would say the COG line would be a more accurate target. That would be 4011, COG, COG, center of gravity. There's one at 4031 and there is one at 4011. That would also put us right near the top of this little micro double top Tuesday's Globex. I really like that target this morning. Now, of course, we still got to get the job numbers, so that can throw everything in the trash, but I'm expecting a little bit of ambiguity in the numbers today, and that muddiness in the water is probably going to make them want to get a hold of the nerds and get some deeper insight, and that hesitation should be a little bit of a market calming effect, so that we wouldn't see these big, massive sweeping bar like we did, you know, back on Friday with that big expansion day. Now, I could be wrong, right? The market can do three things. Can really, really go up today because of the job numbers. It could really go down today, or if the anticipation happens to be spot on with what we get, we could really not do much of anything. That's kind of my base case argument. If we don't do much of anything, get excited, it spikes around, leaves some really big wicks, and then calms back down again, then we turn bullish and we aim for these 4009 area and we get up into that zone. So that's my base case argument. But with that in mind, knowing that we do have some job numbers today, let's anticipate what the extreme is. Notice, by the way, that there's no market maker move this morning, which kind of implies that the traders also are not anticipating a really big move this morning, or if they did, the front end of the curve in the implied volatility would be higher than the back, and we would have a market maker move, and we don't. So yeah, but let's just take that ADR, cut it in half, and add it to the ADR. So we'll call it $75. Cut that in half. We get 37. So we're looking at what, 110 by the time we put all these numbers together. So let's take a $110 move from the close. And that was just some dirty napkin math. If you want to nerd out like a Canadian engineer, get your calculator and go for it. That gets us up to our weekly pivot point. I mean, not spot on to the dot, but close enough. And it's also an open from Monday. I would just aim for the weekly pivot point. So if things get a little rowdy, the weekly pivot point is in play. Keep in mind, we've seen numbers pretty wild this year. 3% days, we've had many of them. So we very easily could make a 3% day. I just don't see it in the cards yet. Mainly because we don't have that market maker move. And by the way, the job numbers, and it's not just the job numbers, but economic numbers. Bloomberg will survey like 20 people and they'll say, what do you think the numbers are going to be? And after they're done with those 20 people, they look at all the answers and they look for an average. And that's what they use. They're like, well, consensus says they think it's going to be this. That doesn't really give me that warm, fuzzy feeling. And they've been wrong before. Keep that in mind. The days that really scare me are when they don't sound like they're asking. They sound like they're telling us, oh, we know the numbers are going to be heavy today. We know the numbers are going to be light today. They don't know any more than we know. But when they start to imply that, I get a little nervous. Because when they're wrong, and they have been wrong, that's when we get the biggest moves. It's when we catch traders off sides. 38.62 to the downside is the ADR. If we were to expand on that a little bit and add a little extra, it gets us down to around 38.30-ish. There is a COG line at 38.11, but I think that's just a little too far for the measurement that we're using. But it's not too far if we just look at percentage basis, because that's around 3.25%. We could do that. So it's not out of line, 38.11. But base case, if we start heading to the downside, 38.25, 38.30 is more within line of the ADR measurements. Yesterday, I had a few people reach out and say they had a hard time trading because it was difficult. I give you a little tip when it comes to day trading. And I'm not saying that you can't trade in here. I traded in there. I'm saying that it's going to be more difficult. If price action is inside of its own Globex range, it's going to be difficult to trade. So if you're trying to day trade and you're losing more often than you win, quit trying to do the hard stuff and focus on doing the easy stuff. Save the hard stuff for later. So a good rule of thumb, if you're having a hard time day trading, is just don't trade if we're inside of either A, the 5-minute open range, or B, inside of our own Globex range. If you quit doing that, you'll quit losing so often. I'm not going to say you're just going to start winning, but you'll quit losing so often. So, there are degrees of difficulty when it comes to trading. Quit doing the hard stuff. It's a simple thing to be able to measure yesterday's range or even our own Globex and draw a box like I did right there. So for today, we could easily do the same thing. We have a Globex low and we have a Globex high. And just as simple as that, drawing a box and throwing it forward, or marking a line across the top and throwing it across. I have indicators that'll do the same thing. On Thinkorswim, if you don't want to use custom stuff, I know a couple of you fund managers, you don't bring custom studies in, fine. You can just type in the word daily and you have your high-low and then your daily open, and that'll mark those out for you. And they are Thinkorswim, like they're originals. With that in mind, what I'm looking for today is an inside day breakout. I traded inside the range yesterday. It was fine. We had a little bit of violence. And that was enough to get paid. But I want a bigger one today. Getting hungry. So I want to see an inside day breakout with conviction. And my own personal target is the cash open from Tuesday. It's my line in the sand. It's my goalpost. It's right at 4,000. That's if we get an upside move. If we're headed to the downside, 38.5. It's kind of my benchmark. Now, what you have to be careful of is, and this will be the discussion on either side, what you got to be careful of is coming down there and wicking down and then coming back up, especially since we've already got that double bottom. If I wanted to trap a bunch of bears, that's exactly what I would do. I would run it down, get it below yesterday's low, trap a bunch of bears, and then run it right up against them and squeeze them hard and rip it all the way up. And the more they puke out of their positions, the higher and the farther and the faster we would go to the upside. Now, the same thing can be said on the other side of the fence. Flip it all over and have the discussion on the other direction. Inside day breakout higher than the previous day's high. Just a little bit. Just enough to get those bulls all excited, pile them in, dump it right on their head, squeeze them hard to the downside. And as they're puking out their positions, this thing would drop like a rock. So just getting in outside of yesterday's range with one candle print, that's not enough. Keep in mind, we're expecting today a reasonably good size move, a good 2% at least, right? 1.5%, 2% move, which means we're targeting something like 4,000 or 38.50. You have plenty of time to let it get out of this range and then join. You don't have to get in right on the breakout. All right, so just a little bit of patience. If we go to the upside, we're going to want to see KRE expand beyond Tuesday's high relatively early in the trading session. And the same with New York FANG. It's not getting outside of Wednesday's high for these two. It's getting out of Tuesday's high for these two. We're going to want to see the AD on the NASDAQ and the S&P hit at least 75%. Going to want at least one touch of the 800. 1,000 would be better. And we want the weighted AD beyond the 500. I usually end up taking pictures of that stuff and circling out what we need for either the upside or the downside move. So it'll end up being repeated, but that'll be what we're looking for on the upside. For the downside, it'll be -5. It'll be -8 or -1,000. For the KRE, we don't have the level that kind of lines up the way that we want for a downside. So for a downside move, we want to at least just start with getting outside of yesterday's range. And I mean, it seems a little extreme, but getting below the low of the week, which is probably yesterday's low, 59.35 in KRE. It would be an inside week breakout on the NY FANG and the KRE for the downside. Ten-day, 30-minute volume profile. We're at the bottom of the profile. This is the last line of defense for the bulls. When we think about the bigger picture, this whole Christmas run, end of year talk, 3,900 area, 3,930 down to 3,900 is the last hurrah. If they don't get her here, we're going to revisit 2022 lows. They have to defend this, and they're doing a reasonably decent job. And there's a whole lot of major moving averages along this area right here. We got like the 50, the 10-week, all these things right there. Yesterday, we were trapped between the 10-week and the 20. We are at the bottom. An upside move would get us through a price shelf at 39.60. Be a little difficult, but then we get into a nice air pocket. Start hitting resistance at around 4,000 again. If we can get through that, it shallows out a little bit, and then we're up to the point of control at 40.33. That's a stretch, right? But I mean, it is doable. It's an 80-point move, and we can do that. But a lot of trash to work through. When we're at the bottom of the box, we expect to go to the top. It takes days to get there. We're not making it in a day. And when we're at the top of the box, we expect to go to the bottom of the box. And that's what we've seen and we've been working on since last Thursday. The point of control between the TPO and the point of control of the volume profile, they're not quite lined up because we've spent more time at 4,009 and we've got more volume at 4,038.34. One is TPO, time, price, opportunity, and one is volume. Think of it as volume by time versus volume by price. No point of control on the day-to-day to bring forward anyways. This really is a definitive level, a critical moment. It would not surprise me at all to get this run up today. One, it will complete the Head and Shoulders Two, it'll be a part of the whole defending this level. KWEB is up 5% this morning, which makes sense because China did really good yesterday, right? We talked about that 3% move that they had in the overnight hours. Energy is getting a little bit of a rebound, likely into resistance, right? It bounced off support. It's coming up into resistance for a rollover. Emerging markets are up, which makes sense because China was up and emerging markets has a lot of China in it. We use KWEB also as a reflection of what's going on over in China. And then we've got a whole lot of not doing much, right? All these that are less than 0.5%, they don't count for us. Bitcoin fired off a squeeze, and it has a market maker move 2.8%. Average daily range of 3.2. Put those two together, you're looking at a 6% potential move coming out of that short squeeze, and it has a sizzle of 500%. Órale. TLT yesterday continued that advance with a beautiful expansion. When it did this right here, it closed at that spot, and then it rallied up, gapping completely outside of the entire previous day. Opened, never closed the gap, and kept on running. That's a very bullish signal. But yesterday was even more, a part of that continuation. Very bullish. I'll point out, however, that right there, it's the exact same thing. We had that down day, and then the recovery in the later part of the day where we have that wick below. Close, gap and open, and then big gap and open. And it ended up the next day opening low. But then it built this range. We could very likely begin to build that range. It didn't close the gap down here. We really don't have much of an expectation that it's going to close this gap up here if it maintains its bullish posture. And listening to Bloomberg this morning talking about the bond trading, I think it still has some gas left in the tank. Let's just see if it can maintain inside of yesterday's range. We could wick down outside of it, but we're still going to expect to stay inside of it, which kind of provides a little bit of a trade opportunity. It'd be nice to put on, say, a 107.5. Let's see what kind of options we have in there. Yeah, we could run something like an 810. you're going to want to try to catch it closer to the open of yesterday. Right? So we're going to expect some kind of fade back into 107, 108. And we wouldn't be necessarily bearish on it. We're just expecting a little bit of weakness after that explosive move. Just remember, it doesn't have to do that, but it'll look a little bit like this. Right? We had that little bit of a rebound and then yabba dabba doo. Now, at some point, it's going to get a reasonably decent pullback, not just these shallow pullbacks that we've been seeing, but a deeper pullback. And that right now, this is setting up as an island reversal. So a little bit of caution. $110 is an area of resistance to keep your eye on. On the weekly chart, that's a gap that needs closed. We had a lot of optionality yesterday in ExxonMobil. In fact, my S&P short kicked off when we had 3 of these hit at once yesterday. It was during this move here. There was another one that came in late in the day there. We also had them in Amazon. So yesterday, Carvana got whacked, but I mean, that's like a whole different discussion. But then it was Amazon, Nvidia, Amazon, 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 Exxon, 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 Amazon, Exxon. And a lot of those were just hitting back to back. Catching a little bit of a bid this morning. It's around 105.80, which gets us outside of that red candle already. So this morning, we're sitting up here. No, let's do this a little different. I just did a video last night showing the process for getting your quarterly levels, monthly levels. I'm not going to get them that detailed this morning. Just enough to give us some context. All right, we got a long ways to go before we run into any overhead angled resistance. And this 2-day waterfall, almost a 3-day waterfall, it started to recover in the later part of the day yesterday. We want to see if we're going to actually get that recovery. This would be like a Morningstar reversal. And what we're looking for is a Morningstar reversal with a gap up and then a Haramni day. And we were actually talking about that yesterday in chat. It's putting together two 1-candle patterns, the Morningstar being one single candle pattern, and then a Haramni being another one. A gapped up Haramni after a Morningstar reversal is like gold, right? It's that'd be a nice play. It'd also be a red to green. And it would be a red to green in the greater context of a market that had been in an uptrend and is now finally catching a pullback, a needed pullback. So for ExxonMobil, we want to look for 108. Liable to run into a lot of resistance around that 109.5. But if we can get through there, then 112 is not out of line. Obviously, I don't think we can make all of that in a day. That would put us all the way back up to the top of this zone here. And just getting to the zone would be pretty impressive. In the grand scheme of things, you know, this one name doesn't mean anything, right? I want to kind of jump through everything else. So far, we've had a really nice recovery in natural gas. We bounced off that trend line and rallied all the way back to have this graveyard doji. I don't think it can recover and get back above this angled resistance line. I just don't see that it's got it in it. So I'm going to be looking for a gap close and then short this sucker again. But we'll see what it has to offer. Tesla news this morning, I forgot to mention. It's connected to the Twitter drama. Tesla's down, I think it was 2% in the pre-market. Sounds right. Yeah. Closed at 174. We're down to 171. So this is the gap that we're working on right now in Tesla, and a lot of names have this gap. But most of the names that I would focus on that have this gap aren't even close to filling it. Tesla has that opportunity this morning. It's already down here, right? It's down at that 170 level. So what we're going to be focusing on is this naked VPOC down there at 180, 168. And we're going to see if this thing finally is going to break this quarterly, monthly, weekly level, this really important critical 168 area, and finally begin the breakdown into the 150. I have a note worth looking at. Let's see if I can find it. Yeah, break below 166 is what we're going to focus on for the next leg down. And we got a fib at 146. Yeah. right? So that'd be it's a swing target. We're not expecting to get there today, but if we break 2022 low, then the swing target will be 146. I've been talking about financials for a while, mainly KRE, XLF, things like that, but financial names are just, I mean, they got this beautiful move, right? Like an inverted scoop pattern, really strong trend line breakover, nice topping pattern. I mean, it doesn't really get any better than that. JP Morgan hasn't joined its peers yet, right? So if you're looking at like Goldman Sachs and Wells Fargo, they've already not only have this island reversal or this topping pattern, but they've already started to fall back down, right? They've made that rollover and they're halfway through the target back. JP Morgan has not yet broke and made the roll down yet. And in fact, it's up in the pre-market 132.5. So it's up in here. If we're looking for this weakness to continue, we're going to want to see this rally up in the pre-market, bump its head against yesterday's high, and then continue the move to the downside. Notice there's still a gap that needs to be closed here too. So we could overshoot yesterday's high and get up to 133.40. That would be the close of Tuesday. The optionality isn't that great in a lot of those financial names. You know, just because it has options doesn't mean they're good. All right, so the China ADRs are doing really good. It's expected with KWEB being up and China having that 3% move today. So NIO, BABA, Billy, Baidu, PDD, JD, all of those are doing really good this morning. Just I'll stress caution, right? They were doing really good this morning, right? That Monday until we got into the open and they dropped like a brick. So yeah, just a little bit of caution, right? At the very least, anticipate that we could try to bounce on yesterday's high, failing to close the gap, which would be bullish, but getting that bounce on 22.5 and then a rip to the upside on Billy. Baba's going to look a lot like the same. In the pre-market, it seems like it rejected on this Globex or after hours trash. A break above 92.5 will give us a run towards 94. That'd be the open on Monday. And really can't expect to get past 95, not today. So if we get up that far, it'd be stall out spot. It could expand beyond 95, but that'd be reaching the edges. Baidu has less trash to get through. So if we can get above 121, we'd have to start looking elsewhere, right? And you can see how we would really have to go back to like October. So 125, it's kind of a line in the sand. The thing is, this looks like a really nice island reversal, right? So we get the run up and then it gaps, creates this island, and then it gaps back down and works its way back down again. That's what an island reversal should do. But that's exactly the opposite of what we have this morning, because we closed here. And in the pre-market, we are now up to 118.9. So really close to 119. We're all the way up here, which means we have a R2G, right? We have a red to green. So we get this really nice trend up. We need a pullback in a healthy market. And now we're continuing that move upwards. A red to green reversal often gives a 3 to 4% move intraday. Wow, see, we already got 4.5, so we can't really expect much more than that. Let's check the ADR. See what its average is for the day. The average ADR is 3.7, and we have a market maker move of 1.8. So that's 5.5%. We got another 1% at the least, and that would just be measured. So we could go beyond that. Less than a 10% move to 125. So I didn't overreach. It's good to know. All right, all those energy names are getting this rollover. And this morning they're up a little bit, right? They were getting a little bit of that juice back because of how far they had fallen. If we approach this from the idea that it's not going to stick and that it's just a little bit of a upside rebound after having fallen really far, then we're going to be looking for the next short, right? So this is a rally into resistance. This is a bounce off of support. We rally into that resistance, roll over, and start making the next leg down. There was also an article on Bloomberg this morning about China ordering the banks to start buying bond. Remember a while back, they were ordered to buy stocks. It's one of the front articles on Bloomberg. So it shouldn't be that hard to find this morning. Updated December 8 at around 2 o'clock in the morning Central Time, so around 3 a.m. Eastern. And we're seeing the effects of that. And like we talked about earlier in the week, the dollar's not been very helpful like it has been most of the year. You're going to need to keep an eye on it, obviously, but just watch the VIX. It's actually waking up a little bit. It's doing a little better. It's not perfect by any means. There's still a disconnect somewhere. And right now, $23 is the line in the sand, right? So we're going to be looking for that to be taken out, right? So we're going to be looking for that to be taken out, and a break above 23. I really think we're going to see the S&P break below that 39 level. So we're going to kind of try to hold that dichotomy in place, but you can see how it's not quite lined up this morning. Yesterday, when we were flirting with the lows of the day, we kept looking at that $23 level for a break of the lows, and we didn't get it. So now we're kind of near the upper edge of the move, and we're still near $23. So it kind of, the benchmark shifted, right? So now we might need to see something higher than 23. I'd say we want to approach it as we get into the open past this econ, because the econ's throwing everything off. With that, take a look at some opportunities that we can find. All right, so we're getting that rebound in the financials like we had expected. Financials and energy both are getting that little bump to the upside. Bonds are a little weak, but looking really good compared to, say, stock. All right, so China, energy, crude, natural gas. Surprisingly enough, or no, I guess it's not much of a surprise because US dollar Japan is down, so gold's going to be up, silver's going to be up. But we are up in the indexes too. And I mean, they're taking off. That econ's coming out. Semiconductors are not down as much as I would have expected. I thought the news this morning on those would have given it a little more of a whack to the downside, but they seem to be holding up reasonably well. So that's a really tight range in MSTR. If we get a breakout, call it 198, we could easily shoot to 205 in that thing. Yeah, options are light. Not a lot of open interest in there. A couple of key strikes, and that's it. Put side's got more, obviously, because it's the kind of action we had been seeing. The bid ask is trash. MSTR would be a rough one to trade unless you're right up in the front. And even then, that's some really horrible options pricing. Surely I would recommend trading something else. I don't care how good that looks. There's always something better to trade with better optionality than that. All right, Facebook 115.75. I would be looking to first get outside of yesterday's range to the upside, measure that, plot 50% and then 100%, and those would be my targets to the upside. Just keep in mind, we could still get that fake break, right? That breakout to the upside. What's the phrase? Fake breakout, fast failure. With Facebook, we look to close the gap. So if we do get running this morning, breaking outside of 1226 would be a start, or 12.6, and then getting the gap closed at 122.43. And that's well within our boundaries of what Facebook can move. Apple's up to 142.5 this morning. That's greater than the open of yesterday. That's going to be your benchmark on the pullback. As we come into the open and it starts to try to ease back, right? Because markets don't move in a straight line. You're going to want to make sure that that support holds. So like a little bit of a pullback to the open, then a rally up. You're looking at the top of Tuesday in Apple, just like in Facebook. It'd be around 147. Same thing in Microsoft, around 250. And that's if it keeps this bullish posture this morning. Remember, the markets can still give us a fake breakout. Now, keep in mind, this same movement this morning is very similar to this. We get a little bit of economic data. We get that spike to the upside. This causes a liquidity vacuum, and the vacuum needs to close that gap, which it'll work on. And then depending on the posture of everything else that's going on, it'll either keep it or dump it. So just because we're starting out bullish, just because the econ is giving us the green light, doesn't mean we're going to keep it. So be watching for that fake, that head fake. And I talked about that earlier. If you got to go back and rewatch the ES analysis. Everybody have a great day. Be careful and be safe. I'll see you all tomorrow for the real fireworks.